that's happened recently that should be at least mentioned to you, apart from the big stories we've been hearing lately about the various Bitcoin ETFs. Now they've gobbled up a lot of Bitcoin, and then of course the ETH ETF, the Ethereum ETF, that supposedly may come online in June. That's this month. Are of course the recent demands for things like an XRP ETF and possibly other ETFs, Litecoin, who knows what, Doge, Bonk, who knows what will they ask for next? What will be asked for next? But apart from those not insignificant news stories, if you will, in terms of the broader ecosystem of Bitcoin and crypto, is actually something that relates directly back to the Bitcoin ETF. And it's something that we've been saying all along. One of the main reasons that we would see a Bitcoin ETF approved is so that people who have their pensions in pension funds would be able to get in on Bitcoin in a secure way, right? In this relatively safe way, by having their Bitcoin ETF, properly managed through their pension fund. And what does that mean? Well, basically it means, if you work in a job or you own a company or whatever, and you have a pension fund for your employees or for yourself or for both, your pension fund can buy Bitcoin through the Bitcoin ETF, and that means that they would be investing on a regular basis. Whenever they make investments into their pension fund, through all the assets that they buy, they would include in that, some portion into purchasing Bitcoin ETFs. Now, what's interesting about this is that, of course, we've seen, some number of pension funds already do this, lining up and saying, yes, we want to buy, and they're signaling that they want to buy, and more pension fund managers are lining up to buy. What we see is that the state of Wisconsin, which is generally considered to have a very well-run pension fund for its employees, state employees, and is considered very well-run because, first of all, they're fully funded, right? A lot of state pension funds are not fully funded. They have less than the full funds that they need, and so they usually have to take somewhat riskier decisions and strategies and tactics in order to be able to afford paying out their employees. And sometimes they do well with that, and obviously sometimes they don't, right? But Wisconsin is generally considered to be in a really good position because it has a fully funded state pension fund, and they have announced that put about 0.1% of their pension fund purchases from now on into Bitcoin. Okay, so I forget the numbers, some billions of dollars they have in their pension fund, whatever, if it's like 18 billion or something like that, and they're going to put in like 180 million into their Bitcoin ETF purchases. Okay, now while that may sound like a lot, wow, 180 million, that's a lot. Yeah, it is a lot. But when your pension fund is 18 billion and you put in 180 million, you gotta remember that's 0.1%, right? It's 0.1%. It's not a lot. It's almost like an experimental, let's see how this thing flies. And because they're fully funded, it means that they have a kind of longer time horizon for their outlook than a lot of not fully funded state pension funds, as I mentioned, which means they can play a little bit more with time. They can be a bit more patient. They can make a purchase of 180 million, and even if the price drops 70-80% over the next few years, after it peaks out wherever it will, if it already hasn't, if they can keep buying at a discount and remain on track for at least, probably 5 to 10 years before rendering their verdict on whether or not it was a wise decision. Now, why is that important? Well, it's important partly because literally everyone who has stayed holding Bitcoin for about 4 or 5 years has ended up in profit. Everyone, right? If you bought Bitcoin 5 years ago, you're in profit. I mean, frankly, if you bought Bitcoin 4 years ago, you're in profit. And you can go back through time and see that anyone who's held Bitcoin for about 4 years is in profit, right? So that is significant. That's very significant. And even if you include the dip that happened between the end of 2021 and the recent highs that it reached again in March of this year, so 2.5 years or so, if you include that time frame in there, it averages out to, again, not more than 5 years when everybody who was holding reached profitability again. Now, why is that important? It's important because it signals to other pension funds that one of the most successful pension funds in America, government, state-run pension funds in America, is dipping its toes into Bitcoin, and they're putting a not insignificant amount, but still a very small amount, which is well within conservative reason to do. And that means that they can experiment with a long-term horizon, a long-time horizon, if you will, and not really about the small movements that will happen along the way, up and down, as the asset moves away from the mean and mean reverts, right? That means they're making an investment decision, which is a strategic investment decision, much more than a tactical one. As in, they're not trying to trade it, they're trying to invest in it for the long term. Anyway, that's the news about Bitcoin in Wisconsin. I'll talk to you later. Happy Bitcoining.